Winners are not afraid of losing, but losers are. Failure is part of the process of success. People who avoid failure also avoid success. Robert Kiyosaki. And Robert hits the nail on the head. If you are not failing occasionally, you are not trying. Nothing is perfect in this world. There is no perfect trading system. There is no perfect investment scheme. But what we do is we trend follow and we set up parameters for when a trade fails, and there's any number of reasons for that happening. Sometimes the market just does crazy things. All of us who've been in the market for a long time know that. That's why we talk over and over and over again about you practice trading for however long it takes. We're not a stock calling service. We're an education firm. We want you to train with us. It's easy to do. It does take persistence, 10 to 15 minutes a day during the days the stock market is open. You're listening now to the comprehensive review and forecast. Markets are closed on Monday. In the States for the Martin Luther King holiday, they'll be open on Tuesday. So let's talk about what happened this week and what we might see in the coming week. Let's jump into these charts. We see stocks are up for the day, so is gold. Bonds down quite big, 0.85%, which is a nice down day for bonds. And again, don't have anything against that. Why? Because we pay attention to the markets, and we don't care which way the markets go. We just want to be there when they go in that direction. Inverse funds. I want you to take that training. It's available at the YouTube channel and at the website. It's called Inverse Funds, How to Make Money When Markets Crash. We want you to practice trade inverse funds too when the markets are going down. Okay, let's jump into the S&P 500. What do we see going on? We see on the S&P 500 a big green up candle for the week. In fact, it's the biggest green up candle we have seen in quite a while. Many weeks. Remember we had that weekly vertical crossover back on the 1st of November, the week ending that Friday. We have only had one small bump in the road. That is a red spinning top, open box spinning top, the week ending December the 6th. Since then, market just keeps going up. Price percent oscillator is actually kicking it up a notch. Derivative oscillator for the first time in 3 weeks gained. It actually got bigger. It had been reducing for the last 3 weeks. We go from the weekly to the 2-day. 2 days continuing to pull away from that red signal line. This is just first day of the latest 2-day candle. I ask you who jumped in to that changeover. Well, we see it continuing to move up. And again, I know it's getting shaky. I know it's getting questionable. But look at those candles. Hard to argue with right now as we see things continuing to spike up. That's the first day of the latest 2-day candle. Look at what happened in the morning up and then a little bit further up in the afternoon. Price well above the weekly and the 2-day. Price percent oscillator heading up. Derivative oscillator gaining momentum for the last 2 days. Again, nice to see. Things just keep going higher. You've heard my thoughts on why as we continue to see the Fed put more and more money into the markets, making them available for the banks. Central banks all around the world inflating money supplies. What can the market do but go up? It also helps that the economy appears to be doing well. Lots of people have jobs and are spending. Let's go to the Qs next. By the way, S&P up 0.13%, Q's up almost 0.5%, 0.49%. Look at that big green candle ending the week. Price percent oscillator ticking up higher, derivative oscillator gaining upward momentum. Go to the 2-day chart, first day of the latest 2-day candle. Nice big green up candle, price well above the 2-day and the weekly. Price percent oscillator is heading up, derivative oscillator gaining upward momentum. What does the 4-hour chart show us? Again, that 4-hour crossover in the morning, finally starting to pull away further up in the afternoon with the derivative oscillator popping over. So again, possible You could have been looking for that also. So again, we look at the 2-day chart there on the Qs. Remember when we saw that 2-day crossover? How many of you jumped in there, practice traded that one? Again, moving up nicely. That was that recross that we talked about back when that occurred. Remember, we have crosses. That is the weekly vertical crossover. And we have recrosses on the 2-day and occasionally on the 4-hour. So again, look for opportunities, practice trade them when they make themselves available, learn. They won't all work, but you can sure learn from all of them. That's what practice trading is all about. What do we see going on 20-year bonds? Down for the day, 0.85%. We hone into that weekly chart. We had 2 weeks of up movement, ended the week with a red spinning top, long wick on the top, wick on the bottom. Also, it's a red open box, so it's not a strong down movement for the week. It's just a slow down in that up movement as far as the candles go. But look at that price percent oscillator heading down, pulling away from the 200 period moving average line. Derivative oscillator still losing downward momentum. So remember, weekly's in a confirmed down move, 2 days in a confirmed up move. Let's go to the 2-day now. Take a look at that. Of course, that means we don't have a trade until and unless that 2-day crosses over going down on the price percent oscillator. Derivative oscillator's flat. We do have a red down candle forming. That will not finish drawing until the close of the market on Tuesday. Again, markets closed Monday in the States for the Martin Luther King holiday. Price is sitting, well, we can see we're priced right there on the 2-day trend line. So we'll continue to watch, see what there is to see. Own bonds if we have a trading opportunity. We did see the end of the day, we had a crossover going down on the 4-hour chart. So maybe that's portending a move over going down on the 2-day. Don't know yet. We'll wait and let bonds sort themselves out. Lastly, we go to gold, up 0.18% for the day. Ended the week with a red open box candle. That means a slowdown in the up move. Price percent oscillator still going up, not at the stronger angle it had been the prior week, but still going up. Derivative oscillator gaining upward momentum, just continuing to oscillate upwards. 2-day chart, first day of the latest 2-day candle. We do see it edging up as far as the price percent oscillator goes, and we see a green open box candle. Nothing super strong, but it is moving up. The prior high on the 2-day candle representing Wednesday the 15th and Thursday the 16th of January show a high of 146.73. 146.99, so just a little bit higher. Derivative oscillator losing momentum. We'll wait to see how that 2-day candle finishes drawing at the close of the market on Tuesday after the holiday. Up in the morning, up in the afternoon. Price percent oscillator, though, just not crossing over yet, going up on the 4-hour chart. So we'll wait and see just what happens. Derivative oscillator continuing to lose downward momentum. So that's where we are, folks, as we end the week. We've got a special training for you in the show notes on Pearson's Law. Don't know what Pearson's Law is? You need to listen to that training. It will convince you how important it is for you to record what it is you're learning on a daily basis using the trade worksheets, the weekly market worksheet that you should have filled out as you were listening to this broadcast, and the daily worksheet. How do you use those? How do you get those? They're available in the show notes for free. They're PDFs attached to all the show notes we send out every day. You can print your own out for free. How do you use them? We have training at the YouTube channel and at the website on how to use the trade worksheet, daily market worksheet, and weekly market worksheet. I'll make sure on Tuesday to relaunch those trainings also. If you have some trouble finding it, I'll be putting that out again for you. But we show you how to fill those sheets out. We actually have a great video, 3 videos in fact. Folks, that's where we are as we end the day. If you haven't purchased our book, guess what? We've got the 13th copy of our book. 13th, it's not 13th edition, 13th printing is available for you. We'll be happy to send you an autographed copy. Follow the link in the show notes. If you live overseas, want to order a book, all you have to do is email us cw@chartingwealth.com. And guess what we'll do? We'll send you a PayPal invoice. Pay that. We'll send your book to wherever you are in the world, even if you're in outer Mongolia. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.